is Matthew. Thank you very much for joining. Going to move right into silver here today. In my last video, we talked about gold. What was the exponential regression of the gold price over the last 50 years since the Nixon shock, since gold started trading freely in the market and the last vestiges of the gold standard were ended. And indeed, it's a similar story for silver, but a little bit different on the volatility of silver and how it looks within these exponential percentile bands of how often silver might reach this or that price. So here we go. Last 50 years or so of silver. This is linear scale right now. We can see the exponential growth is pretty subtle. It's not a big, hockey stick, even as big as gold was. Certainly not as big as Bitcoin. But this is what it looks like for the last 50 years. I'm put it on log scale now. Remember, every exponential curve on log scale will turn into a straight line. So here you see that. So you see here back in the 70s, silver was a couple bucks an ounce. And just at the same time as gold peaked at about 850 bucks per ounce, silver was getting above $40 an ounce here on a monthly close, January 1980. And that's a pretty rare event because it's outside this red line. Falls back down, just like gold, 20-year bear market. From over $40 to under $4. Gordon Brown here listed Brown's bottom. Of course, wonderfully sold the Bank of England's gold at this time. And then after the global financial crisis, gold pops back up here again outside the red line at $50 an ounce, very, very briefly, for a couple days, and then back down again to where now it's actually right on the exponential trend line of 50-year growth. So just to explain again what that's going to imply for the way that silver moves. First of all, again, anytime it moves outside these red dotted lines, it's a 5% move, either 2.5% on the downside, which you can see is just barely there when the trend line is getting formed here in the 70s, and twice here during its lifetime, 2.5% on the upside. So it's an observation that occurs only 5% of the time if the price is outside these red bands, okay? And the delta is big. Let's just look at it, say, right here in 2018. The 2 sigma up move is $51. 2 sigma down is $7. So it's a lot of volatility for silver. And it can be anywhere in between, of course. That would happen 95% of the time. But if it's going to hit these rare events, those are the numbers. 51 on the upside, $7 on the downside. Okay? And so, again, just to clarify what this means as for silver's growth, what it has done over the last 50 years, if we look at the slope of this curve, the actual black line, I'm going to take off the percentile bands now, just the slope of this curve, you see here it's a 50% R squared, which isn't that great. I'm not claiming that this is certainly the end-all be-all of where silver could be in 5, 10, 20 years. But remember, 50% R squared, it simply means that the price moves around this line 50% better, or with 50% less volatility than the price would move around the average price over the last 50 plus years. 50% R squared, so it is what it is. And the compound annual growth rate of this line every year, all right, it's 5.4% per year. And again, that doesn't mean that's what you're actually getting, because if you bought here in 1980, and then sold here at Brown's bottom, you got well less than 5.4% per year compound growth. You, in fact, got a major loss. All right, so, this is the name of the game when it comes to long-term speculating, long-term investment. But if you bought anywhere where the price was around this curve, say $4 in 1976, and you held it till today, you would have a 5.4% compound annual growth rate. In fact, slightly more, because you see the current price is just above the trend line, okay? So 5.4% compound annual growth rate per year for silver, or the last thing in the tooltip you can see there, 5.4% compound annual growth translates into a doubling every 13.2 years. So every 13 years, roughly, silver doubles. Now, that's the mathematical calculation. You can see, again, in reality, to actually, hit that, you can be well above that that growth rate here if you bought, say, at the start of the 70s and sold in 1980, or you can be well under that if you did, as I said before, bought in 1980 and sold in 2000. But in general, That is the growth curve, and then we can project this out. Let's go out to we can project this out. Let's go out to 2030. December 2030, the price based on this exponential trend assumed of silver on this exponential regression is $26 per ounce. A reminder, today it's $24 per ounce, $23 per ounce. The price assumed by this 50% R squared exponential regression by 2030, $26 per ounce. So think about that growth rate as far as how fast silver grows, the price of silver over the last 50 years in relation to other things. That's kind of the core of what I'm trying to do on this channel. Hope it helps you. Thanks for watching.